And now we come to trade of the day, the highlights of this week's trades. Let's get into it. Good evening and welcome to Follow the Money, bringing you the latest updates on everything finance, business, the markets, and investment funds. Our top story this week: Goldman Sachs Asset Management has made waves in the financial world, raising over 20 billion for senior direct lending through its latest fund. The fund, known as the West Street Loan Partners 5, is geared towards supporting private equity-backed global businesses. It has already allocated 4 billion across 37 portfolio companies. Direct lending, a crucial component of private equity, has seen a surge in popularity due to fewer regulatory obstacles compared to traditional lending institutions. Goldman Sachs has ambitious plans to expand its private equity portfolio to 300 billion within 5 years, up from the current 130 billion. The latest fund, part of Goldman Sachs' alternative flagship large cap senior lending series, secured 13.1 billion in equity capital and additional funding, including commitments from Goldman Sachs' own balance sheet. Alongside this, the firm secured 550 million in co-investment vehicles and 7 billion in large cap senior direct lending managed accounts. Managed by Goldman Sachs' alternative private credit division, the fund attracted investment from both existing and new investors, as well as commitments from Goldman Sachs and its own employees. Also on Follow the Money this week, Trian Fund Management waves goodbye to Disney. Nelson Peltz, the head of the hedge fund Trian Fund Management, has made headlines by selling his entire stake in Walt Disney Co. According to a report by CNBC, Peltz offloaded his Disney shares at a reported price of $120 per share, raking in an impressive $1 billion on the transaction. It's worth noting that Disney's current share price is hovering around $100, marking a decline of nearly 9% over the last 3 months. This move comes off the heels of a high-profile proxy battle we covered back in April, where Peltz and Trian aimed to secure 2 seats on Disney's board. Their proposed candidates include Peltz himself and Jay Roslow, Disney's former CFO. However, with the support of Vanguard, shareholders ultimately voted decisively to re-elect the existing 12-member board, effectively blocking Peltz and Trian's bid for representation. This move marks a significant development in the ongoing dynamics between activist investors and corporate governance, shaping the trajectory of major companies like Disney. That's all for Follow the Money this week. Thank you for joining us. Join us again next week on the latest updates in the world of money. Back over to the studio for Trade of the Day. Welcome to Trade of the Day, our groundbreaking weekly trading series where we reveal the secrets to achieving consistent weekly profits in the fast paced world of day trading. Join us every week on this exhilarating journey as we decode the strategies and mindset needed to harness the power of the market and unlock remarkable financial growth. Whether you're a new trader seeking to build your wealth or a seasoned investor aiming to amplify your gains, our series is your roadmap to success. Get ready to revolutionize your trading approach and embark on a path towards achieving your financial dreams 1 week at a time. Also, we love to know where in the world you're tuning in from, so post in the comments below. A reminder that this is not financial advice and that trading comes with real risk. My name is Alice, and I help traders and investors who struggle with confidence to make money in the financial markets find consistency and scale to achieve financial freedom, time freedom, and location freedom. I believe trading is the greatest wealth building tool of all time, and everyone on this planet needs access to this skill. I'm on a mission to impact 1 million people through trading by 2030. Woo! Let's go. Coming up this week, this is how you could have made 5% in the market, taking one trade using one model, risking no more than 2% of your equity, looking for a 1 to 3. So you're risking 2% to make 6%. This week was really insightful. I learned a lot about myself and the model. I can easily identify the model forming and wait for my entry criteria to be met before placing a limit order. Also, I discovered that my patience in trades needs more work. I tend to get impatient when the trade gets close to my TP. As I develop and grow as a trader, the information provided on this series will also improve. Everything I share here is how we trade at Am the Trader. We had a total of 6 trades this week for a potential return of 28%, but remember our target is 5% for the week. Before we dive deep into this week's trade of the day, let's talk about a trading edge and what that entails. A trading edge is one of the three pillars every trader must have in their trading to survive and thrive in the financial market. If you don't have these three pillars in your trading, you're setting yourself up to fail. Confidence in your trading edge comes from three things. One, understanding the market and how it operates. Two, having one trading model that has IPTA signatures. Three, having a plan and process that you follow every single day. Successful trading is boring. You're doing the same thing over and over again. This is the three-step process I use to take trades weekly. We have step one, condition. This is based on a high time frame directional bias. Step two, stage. What sets up your trade? What does it look like? Step three, execution. Can you execute? Have your entry criteria been met to get in that trade? The most important step is step two, the stage, because once you understand where the market is going and you understand the setup, the entry is easy. Also, guys, if you understand price flows that occur around key highs and lows intraday, you'll have everything you need for setup. And you don't even have to pay me for that one, okay? Step one, condition. Determine the high time frame directional bias. Where is the weekly candle likely to go? What is it reaching for? This will give you your condition going into the week. Several factors go into determine the higher time frame directional bias. However, there are only two options. It's either you're expecting the weekly candle to expand higher or you're expecting the weekly candle to expand lower. Step two, stage. What sets up your trade? What does it look like? First, we look at the economic calendar for the week. It tells us when to look for a setup. We look for medium to high impact news drives to narrow our focus. We stock setup on calendar day and after the news release. The optimal days to trade this week were Tuesday, Wednesday, Thursday, and Friday. Secondly, we look at what sets up your trade. What does it look like? This would be your model. If your weekly analysis suggests that price is going higher, then you're in a buy program and you're hunting long formation. For our buy model, we want to see price trade below a key low, displacement higher causing a market structure shift. The displacement leg higher must have a fair value gap busy near the swing low. We wait for a swing high to form to anticipate execution. If your weekly analysis suggests that price is going lower, then you're in a sell program and you should be hunting sell formations. For our sell model, we want to see price trade above a key high, displacement lower causing the market structure shift. The displacement leg lower must have a fair value gap CV near the swing high. We wait for a swing low to form to anticipate execution. Step 3, execution. Can you execute? Have your entry criteria been met to get in that trade? For execution, we're looking to enter on a fair value gap or order block created in a displacement leg that caused the market structure shift. You have two options here. You can either enter a limit order at the fair value gap or a limit order at the order block. We use the fair value gap near the equilibrium. You can also use the low hanging fruit option, meaning the one closest to price. Stop loss will go at the swing low for a buy and at a swing high for a sell. You're always going to be targeting a 1 to 3. It's important to know that you can have both model forming within the span of a day or a week, but your high probability trades will be in the direction of your weekly program. Here are some factors to consider for high probability setup. We have time, the most important aspect of trading. At what time is the setup occurring? Range. Where are we within the range? Are we in the upper, middle, or lower quadrant with respect to buy or sell? Liquidity. Does price create liquidity or is there liquidity in front of the fair value gap or order block? With regards to this liquidity, once price takes the liquidity and enters the fair value gap or order block, you should see an immediate reaction. Lastly, when can you no longer enter the trade? Where is your cutoff point? For me, once price leaves the 0.25 fib extension, I'm no longer interested in entering the trade. Trading is a solo sport. You have to make it unique to you and your personality. All of this sounds complicated, I'm sure, if you're hearing it for the first time, but it's really simple. You just have to keep showing up and look for it on the charts. Now let's head over to the charts and look for it in price action this week. Welcome to Tracking IPTA. Price action this week was amazing to watch. It offered us back-to-back setups. Started the week off with 2 losses on Tuesday, which taught me a few things about the model. For example, I didn't know how long to wait from the formation of the model to the entry not being tagged. So the model's formed, entry criteria has been met, but we don't get tagged in a trade. How long do I wait until the market does what it needs to do for it to come back and tag me in? I learned that this week. Pretty good thing to know when to realize that the trade is no longer valid to get in and to delete the limit order. Finished the week strong with a 7% increase in equity. In dollar signs, we're talking about $1,780. And overall, we're still up on the account 24.8%, which is $6,190. Let's get to hunting. Grab your tools. As always, we'll be looking at the charts in bar replay mode. This means you won't be able to see my executions. However, you will be able to see my horizontal lines, which represent the time aspect of trading, okay? The most important tool you need to track IPTA's movement. Time. Now remember, even though I'm going to show you both buy and sell setups, it's important to know that your high probability trades will be in the direction of your weekly program. You can take counter trend trades with this model. For example, you can take sell setups even if your high time frame directional bias is bullish, and vice versa. It's just your probability of winning decreases significantly when you go against your higher time frame program. We're going into this hunt with the understanding that you guys have already arrived at your higher time frame directional bias. This is a hunt purely for just subs, okay? To the hunt, let's go. Tuesday, May 28th, trade of the day breakdown. We had a PM session buy formation. As you can see, we had medium and high impact news come out in the morning. We had price trade below a kilo lunch session. Displacement higher causing a market structure shift. The displacement leg has a fair value gap busy near the swing low. We wait for a swing high to form to anticipate execution. For execution, we're looking to enter on the fair value gap created in the displacement leg near the equilibrium of the range. And as you can see, we have a fair value gap right here near the 50%. You would have been tagged in this trade at 216, get taken out of that trade at 221. Total time in that trade was 5 minutes. Drawdown in that trade was 58 tick for a negative 2%. Even though you took a loss, that's fine. Charge it to the game. Keep it pushing. Part of the game, okay? Let's look at factors that made this a high probability setup. First, we have the time aspect. Is the PM session. We have the range. We're in the middle to lower quadrant discount for a buy. Check. And then we also have liquidity created right in front of the BISI 3 out of 3, making this a high probability setup. And even though it resulted in a loss, that is part of the game. Losing is the one thing promised to traders, okay? That's Tuesday, May 28th, trade of the day breakdown. Start the week off with the L, no worries. Tuesday, May 28th, we also had another buy formation form in the PM session. Let's break this one down. We already had the news come out in the morning. As you can see, we take liquidity below a kilo. Displacement higher causing a market structure shift above the kilo. The displacement leg has a fair value gap busy near the swing low. We're waiting for a swing high to form to anticipate execution. For execution, we're looking to enter on a fair value gap created near or at the equilibrium of the range. And as you can see, we had a fair value gap near the 50%. You would have been tagged in this trade at 322, breaking even at 325, getting out of that trade same time as the break even, 325, for a total time of 3 minutes in this trade. Drawdown in this trade was 2 ticks for 6% bagged and tagged. Let's look at factors that made this a high probability setup. As always, we're looking for 2 out of the 3 between time, range, and liquidity to be present to consider it an A plus setup. We have the time aspect, we're in the PM session, and we also have the range. We're in the middle to lower quadrant for buy, in a discount for buy. 2 out of the 3 matching up here to make this a high probability trade, netting you 6%. Wednesday, May 29th, trade of the day breakdown. We had an AM session buy formation. As you can see, we had news coming out, medium impact news coming out at 10. Post 10 o'clock is when we're looking for a signal to get on a trade. We're actually looking to enter the market post 10:10. As you can see, we had price trade below a kilo. Liquidity was taken below a kilo, displacement higher causing the market structure shift. The displacement leg has a fair value gap busy near the swing low. We're waiting for a swing high to form to anticipate execution. We had the swing high confirmed after this candle closure. We confirmed the swing high. We have a fair value gap busy near the 50% of the range. You would have been tagged in this trade at 1022, breaking even at 1025, getting that trade at 1034 for a total time of 12 minutes in this trade. Drawdown on this trade was 42 ticks for 6% bagged and tagged. You're coming home with me. Let's look at factors that made this trade a high probability setup. We have the time aspect, the AM session post 10:10. Check the range. We're in the middle to lower quadrant for a buy and a discount for a buy. Check. No liquidity created, but we have 2 out of the 3 matching up, making this a high probability setup, netting you 6%. Thursday, May 30, trade of the day breakdown. We had a AM session sell formation form. As you can see, we had news coming out 8:30 and 10 a.m. After 10 o'clock is when we're looking for the signal to enter the market. And as you can see, we had price trade above a key high. We took liquidity above a key high. Displacement lower, causing a market structure shift. The displacement leg has a fair value gap CB near the swing high. We're waiting for a swing low to form to anticipate execution. For execution, we're looking to enter on a fair value gap created in the displacement leg near the EQ of the range. And as you can see, we had the fair value gap right here at the EQ of the range. You would have been tagged in this trade at 10:16, breaking even at 10:43, get taken out that trade at 11:04 for a total time of 48 minutes in this trade. Drawdown in this trade was 39 ticks for a 6% bag and tag. Let's look at factors that made this a high probability trade. First, we have the time aspect. Is AM session post 10:10. We range, we're in the upper to middle quadrant of the range. We're in the premium for a sell. Check. No liquidity created in front of this SIBI, but we do have liquidity created in front of this SIBI. But you're entering here, no liquidity technically. But anyway, we still have 2 things matching up to make this a high probability setup. Fun fact, this was the trade that passed me my 50K combined with Top Step. I'm officially a certified funded trader. Let's go. Also on Thursday, we had a lunch session buy formation form. It's rare that we get lunch session setups, but they do happen. Let's break it down. As always, we start with the news. We had the news come out in the morning at 8:30 and 10. Lunch session starts. We had price trade below a kilo. We take liquidity below a kilo. Displacement higher, causing a market structure shift. The displacement leg has a fair value gap busy near the swing low. We're waiting for a swing high to form to anticipate execution. For execution, we're looking to enter on a fair value gap created in a displacement leg that took structure at or near the 50% range. Okay, as you can see, we had the fair value gap at the 50% level right here. So you would have been tagged in this trade at 12:08, breaking even at 1:11, getting out that trade at 1:42 for a total time of 1 hour 34 minutes in this trade. Drawdown in this trade was 13 ticks for a 6% bag and tag. Let's look at factors that made this a high probability setup. We had the time aspect, is lunch session. I usually don't trade the lunch session, but you can trade the lunch session. It's just it's up to you. So time aspect, we had the lunch session, check. Range, we're in the discount of the range for a buy, check. No liquidity created in front of the busy, but we do have 2 out of the 2 time and range matching up to make this a high probability trade. Friday, May 31st, trade of the day breakdown. Now you guys know how I feel about trading on Fridays. But anyway, let's break down this trade. We had high and medium impact news coming out in the morning, 8:30 and 9:45. We had a PM session sell formation form. As you can see, PM session started right here, 1:30. We had price trade above a key high. Lunch session high takes that. Displacement lower, causing the market structure shift. Multiple structures were taken. The displacement leg has a fair value gap CB near the swing high. We're waiting for a swing low to form to anticipate execution. As you can see, we had the swing low form right here. This candle, once this candle closed, it would have confirmed this swing low, then you'll be anticipating execution. For execution, we're looking to enter on a fair value gap created in the displacement leg that caused the market structure shift at or near the 50%. We had the fair value gap CB right here near the 50%. You would have been tagged in this trade at 1:45, breaking even at 2:31, taking out that trade at the same time as the break even, 2:31, for a total time of 56 minutes. Drawdown in this trade was 29 ticks for a 6% bagged and tagged. Let's consider factors that made this a high probability setup. First, we look at the time. It's PM session. Check. We have the time aspect. The range, we're in the middle to upper quadrant on premium for a sell, check. We also have liquidity created right here in front of the SIBI, check. 3 out of 3, making this a high probability trade, which netted you 6%. Friday trade, I'm not really big on trading Friday, but it's totally up to you. Trading is a solo sport. If you're down for taking trades on Friday, you're down for taking trades on Friday. Like I always say, you don't have to break even either. You can leave the trade stop loss to 1 to 3 and just forget about it. Breaking even is something I do personally. Anyway, that wraps it up for tracking IPTA this week. Hopefully you guys learned something and you enjoyed this one. This week was amazing. I became a funded trader. It just proved to me that I'm on the right path and I'm doing the right things and to keep going. See you guys next week for tracking IPTA. Every week, we have shown you at least one or more opportunities that could have netted you 5%. With a 2% risk, if you had taken all 6 trades this week, you'd be looking at 28% for the week. But remember, we're only looking for one trade that will net us out 5% and we're done trading for the week. Us traders, we must be content with enough and we must learn to limit trade frequency. The less you're in the market, the less of your money it will take. Hopefully you found this one insightful and hopefully you enjoyed this one. Deciding to become a trader is the greatest decision one will ever make. It is the fastest way to build the life that you want. And too many of us fail at it, 90% actually. This is because we're not equipped with the right tools to ensure survival, let alone thrive. There's a way to succeed at trading. Trade of the day is about showing you how we are doing it at I'm the Trader and how you can do it too. Always remember, this skill is not easy to master, but it's also not impossible. You only fail when you quit. Thank you for watching. See you all next Saturday, same time, same place. Happy hunting.